Good morning, everybody. This is the live market open for March 31st. It's Thursday. It's the last day of the month, the last day of a very, very turbulent quarter. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. We're back to the usual hour in Europe, 8 in London, 9 in Central European time. That's 7 GMT according to daylight savings time. I hope that the regulars that have missed the show yesterday will be able to join us today and get used to this hour, which is basically the same hour we used to do it beforehand, before the change. Anyway, as usual, we'll talk about recent developments in markets, charts and levels, the next 24 hours, which could be quite busy, and of course, your questions. Your questions. If you cannot see the chat box, if you cannot see the video, refresh as Adinda here suggests. So good morning, everybody. If you cannot see the chat, you cannot see the chat box once again, please go to the address here, https tlk.io/fx-forex-live-video. Okay, what's the mood in markets? Well, we had already on Tuesday Yellen, the chair of the Federal Reserve, going fully dovish, and it still hurts the US dollar. We did see some attempts to recover. I would call them the dead cat bounce. You know, even if you throw a dead cat, it still bounces. I guess some animal lovers will not like this, but this is a common market expression. Other stuff that we had, sort of moving markets, we had a roller coaster in crude oil inventories. They were better than expected. We had a temporary rush in oil prices, but it rebounded. Now oil is even lower. And perhaps the most important thing for the last few hours and the next few hours is the end of month, end of quarter flows. Specifically in Japan, this is the end of the fiscal year, okay? That's when the books close. That's when people rush to close their positions to get the fix at the right level because it determines the results, okay? Let's move to currencies before we talk about events for yesterday and then for today. So this is euro dollar. I'm on the 15 hour. Okay, here we are. Anyway, what did we have yesterday in euro dollar? First of all, we had an extension of the collapse of the US dollar, and we reached already 113.65. Okay, the dollar did attempt to recover, but we didn't even fall under 113. So 113.44, which I mentioned beforehand, which was the high back in 2 weeks ago, around the Fed decision. This remains sort of the immediate resistance. Okay. Good morning, everybody. Good morning, Fabian, Luca, Tenda, Ed, everybody. Anyway, here we are again under the same line, but also the recovery of the US dollar, also the fall of euro dollar didn't go too far at all. Okay, so this is the failed recovery attempt. Okay, pound dollar currently 143.43. This is a more erratic pair. Here we had, of course, here we had a move above 144.40. This seemed like a failed fake breakout. We're back under 143.65, which is a critical level. Look how it supported the pair right here in last week. Look how it supported the pair right here in the earlier this month, and now it worked as support. Now the pair fell back above it, under this line. Okay, so we're back to the previous range of 142.80 to 143.65. Actually, now we have Carney speaking right now. Let's see if I can grab any headlines for you at the moment before we move to other stuff. So he's supposed to speak right now. I will be on the lookout for headlines, okay? In addition, we had a release of the Spanish CPI for March, okay? The flash CPI, it came out month over month. Well, let's look at the calendar. Why do I need to speak without showing the data? So Disappointment once again here in Spain. Instead of prices are falling year over year at a rate of 1%, the same like last month, worse than 0.9 expected. This comes in contrast to the better than expected German figures we had yesterday. So yesterday, German CPI, all the figures came out better than expected. Here we are. Okay, the most important ones to watch, the European standard, the HICP, Harmonized Index of Consumer Prices, and the year-over-year one. It was expected to rise. No, sorry, that's not the correct one. When I'm looking at it, this is this one. So it was expected to drop 0.1, better than last month, 0.2. Instead, it rose 0.1. It wasn't such a big surprise in markets because during the European morning, we already had releases from the various German states. We even covered it in the show yesterday, and I mentioned it could be a bit better than expected. So I would say that the moves in euro-dollar are more related to the wobbles around the US dollar more than the German CPI, because that was, better than expected, not such a huge surprise. For the all-European CPI, we already have some bad news from the fourth largest economy, from Spain, which came out worse than expected. Okay. Anyway, I'm looking for headlines from Carney's speech. Let's see if we have any kind of movement in the pound. We still probably didn't begin talking, and the statement hasn't been released as of now. Anyway, 143.48 resistance, 143.65 support, 142.80. Once I get any kind of headlines, we'll jump back to the pound. Let's continue with dollar yen. We're seeing here some more erratic moves around the close of the month, the quarter, and the fiscal year in Japan, the land of the rising sun. It's already getting close to the end of the day, the end of the first quarter, and the end of the fiscal year. Currently 112.43, and we did have a breakdown under 112.20 yesterday morning, then a move to the upside. I still see 112.20 as support. 112.80 is the next level of resistance. Further support at the critical line of 111. Remember, some erratic, irrational moves, that's just because of the end of the fiscal year. We'll soon have that also here in Europe around the London fix. Let's continue. Dollar CAD. Yesterday we had better than expected inventories. We had more oil. Okay? Less oil in inventories than expected. We still had a rise, but it went up. It was less than expected, so oil prices pushed a bit to the upside. For the Canadian dollar that was already riding against the US dollar and the dollar's weakness, it helped a lot. Now we have a double bottom here at 129.30. Okay, so this is becoming a strong line. Currently, dollar CAD is rising a bit and still battling the 130 line, a very round and important number. We've seen this battle just 2 weeks ago around the Fed decision. Since then, when we had hawkish comments from Fed members, we've seen the pair move back up. But now with after Yellen's dovish talk, had a fall back under 131.70, and with the second round, the combination of a second round of dollar weakness and crude oil inventories, we had it fall under 130. Okay, now I'll jump to oil. You can see that oil did make this big jump yesterday, but failed to reach the $40 level on WTI crude oil, and since then we had a big fall. So a big rebound, a big short squeeze. Actually, we're even lower than the level seen before the release. Actually, we're at the lowest levels since March 16th, since before the Fed decision. Anyway, it's a bit weird. I would blame this on end of month, end of quarter flows, and short squeeze, and this is becoming messy in oil. For the Canadian dollar, it's still Canadian dollar shows a lot of strength. It shows that it remains strong despite the bounce back down in oil prices. Okay, we have also a Canadian event today. Let's continue with Australian, the Australian dollar. We had a move above 77, above the previous high of 76.80. Now we're back down to 76.50. It would stay. I would say we're still in range. That would count as a false breakout above the previous high seen here around that Fed decision in the middle of this month, 2 weeks ago. 76 remains support. Kiwi dollar, 68.98, a bit falling. We reached a new high here. The Kiwi dollar showed a lot of strength despite a fall in business confidence in New Zealand. We'll talk about events we had recently. Anyway, 69, almost there, getting close to the round number of 70. But probably the Kiwi has some kind of altitude sickness over there. Yeah, anyway, 68.20 remains support. And okay. Dollar Swiss broke to lower ground under that 96.40 line I mentioned. This was the low once again around the Fed decision in March, around March 17th. Now we've hit even lower ground. Okay, dipped temporarily under 96. I would say support is right here, just under 96, 95, 90. Okay. Resistance, well, now that we've climbed back, we already have support at 96.40, further resistance at 98. Euro Swiss sticking to the 109 handle, not going anywhere fast. On Euro Pound, we're at just around 79. 79.30 remains resistance. We had a false break here, but this is a strong line of resistance. Support at 77.40. I would say the trend is still to the upside here on Brexit fears, but remember that the Brexit can also hurt the euro. It's basically a breakup of the European Union. I mean, if a big country leaves the EU, will soon have Carney's speech, and I'm sure he'll be unable to avoid the question of Brexit. Okay. Let's continue to Euro Yen. Moving up very gradually, very choppily. 128 is resistance. 127 is some kind of resistance. Not well, some kind of support, but the pair is quite choppy. Both currencies are more or less trading together. We are seeing a move to the upside, but it's a bit limited. Further resistance at 128.20, 129.75, and support at 125. Pound yen, always interesting and very nice technical behavior. Currently at 161.30. We had a battle with 162.20, but the pound, remember, we have this inherent weakness. It did not manage to break higher despite this wobble in the yen. Anyway, we're back to the previous range, 160 to 162.20. Further resistance, 163.80, and further support, 158.50. The dragon is well tamed at the moment. It's behaving quite nicely. Okay, still waiting for Carney. I believe Carney can push the pound lower, but so far I haven't been able to see any headlines. If you guys, while I speak, manage to read any headlines, please let me know in the chat. Okay, so we covered all the main currencies. Let's talk about some events we had yesterday. Of course, your questions are always welcome. Well, before event yesterday, one of my favorite tools, the Fed group, CME group, Fed Watch. Okay, for April 27th is the next Fed meeting. No press conference, no new forecasts. Sorry, only 7% of rate hike. In June, also, expectations are falling quite fast. Remember that before Yellen began speaking, it was around 57%, something like that. Against the rate hike, now it's 80% against the rate hike. Actually, the next rate hike is only priced into not just after the US presidential elections, actually. This is the only time we have over 50% chance. Again, according to bond markets, again, this changes all the time. But one more hike is expected according to bond markets. Yellen really killed expectations. Okay, now let's talk about events we had yesterday. Your questions are, of course, always welcome. So, as I mentioned before, German CPI beat expectations, plus 0.1 in the most important figure against minus 0.1 expected. ADP non-farm payrolls, a big hint towards Friday's, towards tomorrow's NFP, came out slightly better than expected. 194 was expected, 200,000 was the result, but we had a downwards revision for the previous month of February. So all in all, it's okay. The U.S. economy is still gaining jobs. This doesn't change the expectations for the non-farm payrolls. So it wasn't enough to give a boost to the failing U.S. dollar. Okay, in New Zealand, the ANZ business confidence dropped to 3.2. Perhaps that can explain, or that served as an excuse for some profit taking on the rises on Kiwi dollar, which we've seen after the big rally. And this morning, German retail sales came out a bit mixed, with disappointment month over month, but better than expected year over year. Here we have the figures on the screen. Let me zoom in a bit so you'll see it in a larger font. So month over month, a rise of 0.3 was expected. The actual was a drop of 0.4. Year over year actually was much better than expected because we had an upward revision. So it's 5.4 against 2.2. Quite choppy, not that significant. Okay, I still cannot pick up any headline from Carney. I see here a question. Do you have a view on China PMIs? Good, stable readings may give another leg up. Kiwi and Aussie, yeah. We'll reach that. That's one of the events I have lined up on my slides, okay? So let's begin just running through the events for today, and we'll reach the Chinese PMIs. For those of you trading at night, this is certainly an important event, okay? So I'm unable to pick up headlines from Carney. After Carney, we have, just after the show, 9:55 here in Europe, 8:55 in London. Okay, we have a headline here. Thank you, Sinatra. Says that the FSB working to build new type of financial system. Yeah, not really monetary policy related. Sounds a bit bold, a new type of financial system. Wow, he's going to be our new leader to a brave new world. Let's look at the pound. Let's see if we have any movement. Not really. Okay. Well, thank you, Sinatra. I hope I'll be able, perhaps with Sinatra's help, perhaps with others' help, to get some monetary policy related figures. If he talks about the Financial Stability Board, I think it is, the FSB, and things like that, these are perhaps important topics, but not market moving ones. I hope this will not turn into a non-event. I really feared that Yellen would turn into a non-event on Tuesday, but luckily that was quite a ride. Okay, thanks, Sinatra. We'll keep on following the figures. So another event from German employment change, right? So the employment situation in Germany, at least on paper, looks really good. I know that many people are earning very poor wages, especially in East Germany. There's a growing class of working poor. But in terms of the general statistics, we're seeing month over month fall in the number of the unemployed people. So the numbers have been negative, which is, of course, good news. Less people unemployed. Last time it was a drop of 10,000. This time a drop of only 7,000 is expected. It's not too shabby. The unemployment rate in Germany is expected to remain seasonally adjusted one at 6.2. Let's see, headlines from Carney. The credit outlook for weaker corporate issuers. Some sovereigns. Okay, he's talking. Carney also has the hat as the chair of the Financial Stability Board. He talks more about the global economy, less about the pound. Banks must do more to adjust business models to low-rate environment. Strengthen the regulatory framework. effective policy. Looks like useful stuff for the financial system. He's speaking in Tokyo, not at home, not in London. Oh, he's actually Canadian. Anyway, so far I cannot pick up any monetary policy related headlines. So for markets, this is a non-event. Perhaps in the longer term, this will certainly be an event of importance, at an attempt to improve the global financial system, which is, of course, important. I don't think we're fully recovered from the global financial crash. I think we just have two even more too big to fail institutions. Okay. Anyway, continuing, we have more UK events this morning at 8:30 GMT. We have a bulk of US figures, the final GDP report from the United Kingdom. Contrary to the United States, revisions here are quite minimal. Okay, so we're expecting a confirmation of the 0.5% quarter over quarter and 1.9 year over year. Any small change will be a surprise and can move the pound up or down. There isn't a specific, I think the bias is a bit negative, but if we still have a tick up in GDP, either year over year or quarter over quarter or both, it could still give a boost to the pound because nobody's expecting a revision. Okay. In addition, at the same time, we have the net lending to individuals expected to slide a bit from 5.3 to 5.1. And perhaps more importantly, well, consumer credit expected to slide just a bit. Mortgage approvals for February, it's a bit stale to slide a bit. Current account, this could move the pound a bit more. I know it's not marked here as important, but here we're expecting a bigger deficit from 17.4 to 21 billion. This has a little bit more importance this time because of all the talk regarding trade with the EU towards the Brexit. So let's see how the current account fares. Anyway, as usual, when we have a big bulk of events, we should have, in order to see a significant market move, you would need all the figures to move in one direction, all of them to be better than expected or worse than expected. And usually in such a laundry list of figures, we usually have figures going all directions. Okay, so it could be quite mixed. In addition, with UK events, another thing to mention, as usual, we usually have markets front running the release. So watch out in the 15 to 30 minutes before the publication. We could see the pound sliding or rising, only to reverse the moves just after we have the release. Currently, during the show and the 22 minutes I'm speaking, the pound is very stable. Anyway, it fell during the Asian session back to the previous range, 142.80 to 143.65. Let's continue. At 9 GMT, that's 11 here in the old continent, we have the Eurozone CPI. I wrote here already expect a beat. That's because German figures came out better than expected. And despite the disappointment in Spain, we could still have, I believe that markets are expecting better figures. So official expectations are talking about a weaker drop in prices, deflation, but weaker instead of minus 0.2 seen in February. The preliminary figures for March should show, according to expectations, a drop of 0.1. Okay. Core inflation is expected to rise from 0.8 to 1%. I believe that real market expectations are a bit higher, let's say flat 0 or even plus 0.1 on the headline figure. Okay, at least on the headline figure, perhaps not on the core figure. Okay, this is of course important for the next ECB decision. They're not expected to change policy in April and not in June, but there's still the tone, the degree of severity regarding inflation, growth, and things like that could be determined by the level of inflation. That's their single mandate. Another comment from Sinatra, pound dollar hovering on top of its 100 MA in H1 in the in hourly chart. Okay, thanks for that. Yeah, so maybe we'll see if we have some kind of a small Let's see if we have maybe a miss on data in the UK. We'll have a big fall in the pound. Ashraf Lady, yeah, he's a great analyst. Carney, low global nominal growth environment creates challenges. Yeah, so Carney is not pleased with global growth like all his colleagues. And yeah, I don't think he really has anything he can do about that. I think, as we heard from Draghi and from others, we will need some fiscal stimulus as well, like it's done in Canada. Anyway, commentary from Ed. The financial system has failed. What system? Yeah, the printing system is in full swing. Buy shares in companies like yeah, printing. Yeah, I would never trade stock. Trade blood it's better than inflated stocks. Well, it's a bit harsh, but anyway, yeah, printing money, mostly money that is printed is mostly in electronic forms. So I'm not sure that companies that actually use printing presses to print money are making the best. It's more speculation about real estate, speculation on stocks, things like that. Okay, let's continue with more events. We talked about CPI. It is important for the Eurozone. I expect a better than expected figure, okay, because of the German numbers. But if we don't have a positive surprise, or if we have a big positive surprise, it could still move the euro, okay? Let's continue. Okay, well, Italian prices are not that important. At 1:30 here in the old continent, 11:30 GMT. Don't know why I missed it on my slides. We have the ECB meeting minutes, okay? The meeting minutes are from that meeting early in the month on March 10th, when Draghi introduced a huge stimulus package, but eventually said that basically the ECB is done for now, okay? That really hurt the euro eventually, that really gave a boost to the euro, despite the fact that the ECB did introduce quite a lot. Now we'll hear a few things in these meeting minutes. Usually they're very smooth minutes. They don't tend to move markets too much. We can see in the minutes some evidence about the intensity of the debate. How we know that Germans, the Finns, the Dutch tend to the hawkish side, to the more cautious side on monetary policy, while Draghi, Constanti, and a few other colleagues are more on the dovish side. Let's see how much a debate there was. We know that Weidmann, the head of the Bundesbank, did support introducing more stimulus, but not in the same level that was introduced. I mean, he was in accordance with doing something, but not that much. We'll also hear about the level of anxiety about inflation, about growth prospects, and about another recurring theme in the ECB in recent months, that governments should do more. We heard that from Draghi. Let's see if this is also reflected in the minutes. It'll be interesting, but not as market moving as the Fed's meeting minutes or the Bank of England's meeting minutes. Anyway, worth watching at 11:30 GMT. As I said, a very busy day. At 12:30, we have, as usual, the weekly jobless claims in the United States. And it's expected to remain stable at 265, which is a low number, which is good news. Remember, the problem in the United States is lots of jobs, but low pay. More importantly, at the same time, important at least for those trading the Canadian dollar, we have GDP from Canada. This is a monthly release. Even a good growth rate of 0.3 is expected. This is for the month of January, so we'll have a first glimpse on 2016, on Q1 2016. In December, it was 0.2. let's see if the strength of the Canadian dollar continues. Yeah. Okay, well, also worth mentioning is the Chicago PMI. It's for March, so it's very fresh, but it's not such an important figure. It's expected to rise from 47.6 to 50. More importantly, at night we have a speech by number 3 at the Fed. Some people call them the Troika. Yellen is number 1, Fisher number 2, and number 3 is the president of the New York Fed, William Dudley. He speaks late at night, 9 GMT. He's usually dove. He leans to the dovish side, more like Yellen spoke this week, not like Fisher speaks. So let's see if he also reflects what Yellen said, which is the glass half empty, which is worries about the global economy, worries about inflation, no rush whatsoever to raise rates. Okay, continuing with more events, we have in Japan, just close to midnight GMT, we have the Tankan surveys for the first quarter. Fresh figures, they do impact the Bank of Japan. It's already a new fiscal year in Japan, so we won't have this end of quarter, end of fiscal year movements. Anyway, quite a few figures here. The large manufacturing outlook for Q1, the index, the non-manufacturing, the services ones. In general, we're expecting to see a fall in the manufacturing sector and a rise in services, similar to the trends seen elsewhere. Anyway, once again, when we have a big bulk of figures, they should all go in one direction in order to see movements. If they don't, then it could be quite mixed, okay? And in general, the yen doesn't move that much from indicators, a bit more from inflation, from GDP, but not as much as we were seeing with the euro, the pound, the Aussie, the Kiwi, CAD, and of course the US dollar, okay? And now for what you've asked for, Chinese GDP. So that's we have 2 releases. First of all, the official government, not GDP, sorry, the PMIs, the Purchasing Managers Index. This is for the month of March and is forward-looking. So at 1 GMT, we have the official ones. The manufacturing one is expected to tick up from 49 to 49.3. And services one, we don't have expectations here. It was better, 52.7. So like in other countries, like in developed economies, manufacturing is under 50 points. That means in contraction territory, shallow contraction, not anything alarming, but it's there for quite some time, okay? So we're seeing a general deterioration. Anyway, so a small rise is expected, while services is doing better. Perhaps more importantly for markets is the Caixin Manufacturing PMI, formerly HSBC. Okay, this is an independent measure. I'm not sure how independent they really are, but by markets it's considered sort of a more reliable figure. It's off the lows around the 47 level that we've seen during 2015, around the crash in markets in August and then in October. So we're on higher ground. Things have sort of stabilized. And also here, a rise from 48 to 42, 48.2 is expected. I think things are looking better. I think we could even see beats on both figures, if to answer the question asked actually quite some time ago. Sorry for taking my time with answering that. So why do I think things are going to be better in China? Well, I'm not sure things are really going to be better with the Chinese economy. But remember, the PMI is a survey of purchasing managers indices. So it also reflects the mood, not necessarily the forward-looking mood, not necessarily the actual situation on the ground. Also the actual situation, but not only that. So we heard recently significant moves from the Chinese authorities. First of all, in their big meeting, the Chinese Congress or whatever it's called, they announced a growth rate of between 6.5 to 7%. So on one hand, there is some flexibility. On the other hand, they do commit to some floor on growth at 6.5%. The second thing that happened not that long ago is that they cut the reserve requirement ratio. That means that banks can lend more. both these things and stability in stock markets in comparison to the turmoil early in the year, I believe all these things can push the mood higher. It means we could really see the rise in these figures as expected in the economic calendar, and even a bit further. So I'm optimistic, and yes, it could give a boost to the Aussie, perhaps help it break above that 76.80 line and beyond. I mean, we did have a false break, and also for the Kiwi to get closer to 70. But you never know, especially with the independent one, which is considered more reliable. If we have a drop under both round numbers, that means in the official one under 49, and more importantly, in the independent one under 48, we could see stocks falling in Asia, afterwards in Europe. We could also see, of course, the Aussie and the Kiwi. It would be an opportunity to take profit on both of them, so the falls could be sharp. So my tendency is to expect a better than expected figure, okay? But you should be aware that, especially for the Aussie, this is an important release, especially the independent one. And yeah, so watch out, okay? So here are some comments here. Yeah, copy pasted the caps. Yeah, usually headlines on Reuters and Bloomberg come in all caps. Other comments here. To me, German news will be positive surprise. Neutral German news will be positive surprise. After all, the Volkswagen scandal is asking its price now, and companies are first letting off the subcontractor employees. They try to keep this slow in the news as they know the market has a fever already. Yeah, and since the VW crisis that erupted in at the end of September, it was 6 months ago, we also had worries about Deutsche Bank. So the symbols of German industry are wobbling. Okay, nevertheless, the German economy is still strong. At the moment, as we speak, we're seeing euro dollar rise just a bit, trying again to break above 113.50. The next line above that is 113.75. Okay. Let's see if we have any more headlines from Carney. Something I didn't. No, nothing here. Anyway, in about just after we finish the show, we'll get the German employment figures, which are important for markets, for the euro, for the German stock market that you're mentioning here. You're mentioning the DAX, not the DXY, not the DAX. Anyway, and of course for politics in Germany. And the dollar index is cut between two major trend lines. Okay, thanks for this chart. Yeah, nice confluence over there. I'm sharing it now with everybody. Yeah, I must say Dale Pinkert, which has the afternoon show or morning show in the United States, is an expert on the dollar index. We're seeing it fall now from the highs. There's talk in the market if it's the end of the big dollar move or not. Yeah, I think we haven't seen it all, but this week's dovish tone from Yellen, repeating her dovish tone, of course, weighs heavily on the US dollar. Okay. Yeah, and of course, it's important to remember we're tomorrow we have the non-farm payrolls, the first day of the month. It's April Fool's Day tomorrow. I hope it doesn't fool us too much, and it's always a market mover, and the tension is already building towards this event. Okay. Yeah, I think it's about time to get to the wrap up for today. Any more questions? Let's just take another look at dollar yen, which had very erratic moves. Oh, it's stabilizing as well. Pound dollar also not moving too much on Carney. I expected more from Carney, I must admit, but when he doesn't talk about monetary policy, things don't happen. Okay. This is the wrap-up for the live market open for March 31st, the end of the month, the end of the quarter, and the end of the fiscal year in Japan. Okay, we had significant events and also big moves, a busy day ahead today. The impact of Yellen's speech on Tuesday, extremely dovish, seeing the glass half empty, still has a devastating impact on the US dollar. Attempts to recover didn't really succeed so far. Additionally, we had a big wobble in oil prices. Crude oil inventories came out better than expected for oil. We had a big rush in oil prices, but the failure to reconquer $40 sent the price of oil way down below the previous lows. And that's quite interesting to watch. As I mentioned, we're at the end of the fiscal year in Japan, the end of the month, the end of the quarter. That means we have last-minute adjustments, and this is quite messy. Look out for erratic movements, for weird stuff, breaking perhaps technical lines at the end of the end of the European session, the London fix. Okay, so that could be quite messy. Will the dollar be saved from the last moves to correct the recent weakness? We'll learn that quite soon. It's a matter of hours. Yesterday's events, we had a better than expected German CPI. This implies better than expected Eurozone CPI today. ADP NFP came out slightly better than expected, but with the downwards revision for the previous month, basically does not change the expectations for the non-farm payrolls tomorrow. New Zealand and ANZ business confidence dropped just a bit to 3.2 points, allowing some profit taking on the Kiwi. And this morning, German retail sales were mixed, and Spanish CPI was disappointing. But I believe expectations are still higher than what we see on the calendars towards the Eurozone CPI. Okay, so we had also a speech by Mark Carney. I had high expectations for that, but he talked about financial stability, which is an important topic, but not market moving at this point. Just after the show, in less than 15 minutes, we have the German employment change. Another, or should I say more correctly, the unemployment change. We're expecting another drop in the number of unemployed in Europe's largest economy. And this should be, of course, good news in supporting the euro. At 8:30 GMT, we have a big bulk of UK figures, more important than Carney, apparently. Final GDP, no changes are expected. Any change in final GDP can rock the pound. Also note current account, and there are, of course, other figures. As always, expect front running of this event before, but we'll really need to see all the figures, or most of them, coming out to one direction for a movement. Otherwise, it's going to be nothing at all. As I mentioned, at 9, a Eurozone CPI. We're expecting an improvement in any case, at least on the headline number, perhaps a return to 0% from deflation levels, and even better, core inflation is also expected to rise. Something that isn't here on the slide, at 11:30 GMT, we have the ECB meeting minutes. Usually it's not such a big market movers, but it's certainly interesting. We'll talk about that tomorrow. We'll see how divided the ECB was and how worried they are about deflation. At 12:30, like every Thursday, US jobless claims expected to remain low. Another very small hint for the NFP, but not as much as the ADP one. Remember, this time the non-farm payrolls comes on the first day of the month, this time April Fool's Day. So we don't have the full buildup. We don't have the ISM manufacturing and non-manufacturing PMIs. At 12:30, we also have the Canadian GDP figure, expected to show better growth in January than in December. Late at night, we have Bill Dudley speaking, one of the doves and one of the more important members of the Fed. He's number 3 at the Fed and has a permanent vote. Okay, let's see if he echoes Yellen's very dovish tone earlier this week. And at night, for those of you awake, we have key events. Well, I wrote that twice. Anyway, Japanese Tankan, manufacturing and non-manufacturing. Again, all the figures have to move in the same direction. We're expecting, in general, weaker manufacturing, better services, and more importantly, this event, the Chinese PMIs, and more importantly, the independent Chinese Caixin PMI. Both of them are expected to rise just a bit, but remain in contraction territory. I expect an even better result because I think the mood is better in China. The mood about China is better, also from the outside, but you never know. Anyway, if we have it falling under the round numbers, 49 in the official one and 48 in the unofficial one, we could have devastating an opportunity to take profits on the Aussie. Let's move to the charts, beginning from euro dollar, moving up just a bit during the show. Resistance, weak resistance 113.50, high resistance 113.75, support at 112.50. Quite a few events lined up for today in the Eurozone. Pound, dollar, quite stable. It fell from the highs, fell under this very strong separator of ranges, 143.65. Currently 142.80 is support, followed by 142.40 resistance, 143.65 and 144.40. Dollar yen after the end of fiscal year wobbles, stabilizing above support at 112.20 after the false break, I would say, below this line. Resistance 112.80, really strong support at 111. Dollar CAD surprisingly strong. It took advantage of the rise in oil prices, but remained relatively strong when oil prices went south. Okay, if we have beat on Canadian GDP, we could have a move to the really, really strong support line of 128.30. Currently 129.30 is the immediate line of support. 130, 131.70 resistance. Aussie dollar stable in high range between 76 and 76.80. I would regard this move above 77 as false at the moment. 77.40 is the next line. Kiwi dollar hugging the 69 level as we speak. 69.70 is the next line of resistance. 68.20 is support. The Kiwi showing a lot of strength despite the fall in business confidence. Okay, and let's just take a quick look at oil. Oil continues sliding. I remain also bearish on oil. Okay, so we had 1 week of rise in inventories, but there's still just too much oil sloshing around. And we have that April 17th meeting between OPEC and non-OPEC members, and my expectations are quite low. Anyway, very busy day in markets today. And we have, of course, the non-farm payrolls tomorrow, which will draw a lot of attention. I will mention that tomorrow, of course, we'll do a full preview of the NFP, as usual. A preview of next week's events. And I also invite you to join the NFP coverage. It'll be published on FX Street. I think I'm going to take part in that. I'm sure I'm going to take part in that. I'm not sure about the exact hour. I think it's half an hour before the release. That means 12 GMT, but perhaps at 12:15 GMT anyway. Stay tuned. Valeria Bednarik, Adam Button, Dale Pinkard, Mauricio Carrillo. I hope I didn't miss anybody. Should be, we're going to analyze the charts, the data, and talk about the next moves in markets. Okay, so thank you very much, everybody, for coming. Thank you for, thank you very much, Adinda, for sharing the link for the, for the NFP coverage tomorrow. So you're all invited to join. And thank you very much, everybody, for coming. I wish you all a safe and successful trading day. Watch out for those end-of-month flows, end-of-quarter flows. And that's it. Thank you very much, and see you tomorrow. Bye-bye.